Alright, anyways, alright, so trading recap today. I managed to take a loss. I don't even know what to say today. A lot of people did not trade today because, just looking at how the market was moving before market even opened. I mean, like, look at this shit. We were just tapping up and then down and then up and then down, up and then down, up and then down. So, you tell me, should I have traded today or should I have not traded today? But I ended up being a little dumb and took a trade, but in my opinion, I saw a decent amount of confluences, not like crazy good, but it's like decent. So yeah, let's just get started with the high time frame. So first off, what I can see is that we have hourly fair value gaps. All right, so we have one here, we have one here, one here. And then as for the bias today, we were definitely, I would say, bullish and bearish. But in my opinion, I definitely was looking at the bullish side. Because if we look at S&P, we did break structure on the upside right over, yeah, right over here. So here. So, and also here. So in my opinion, I was looking for longs, but on Nasdaq, we actually did not break structure to the upside, which was okay for me, but still, we had to base the trade off liquidity sweeps because that's just how price was moving. We go to the 15 minute, there's really nothing you could see on the 15 minute except for this, and this is all the way back here. So we didn't get much on the 15 minute. We did have a inverse 15 minute fair value gap here, but I mean, let's just go to the 5 minute now. Alright, so this is where I took the trade, and you could see this is really at market opening. So, alright, my balls are itchy right now, so let me scratch them. Alright, actually, let me put some cream on them. Yo, should I be telling you? Should I be getting that in my video? Alright, anyways, okay. So, market opened, and then all of a sudden, we broke structure to the upside, and then we also inversed this fair value gap, tapped into it, and then came all the way up. And at this point, if you look at the 30 minute or even the 15 minute, you can see this is technically liquidity, but I wouldn't say it's high time frame liquidity. I would say it's more like, I mean, it could be used as high time frame liquidity, but at the same time, it's just like um, it could also be low. So in my opinion, I didn't think highly of that, so I just decided to go with low time frame liquidity, right? So when we did end up sweeping it at this point, and we go to the 1 minute, here, so this is what I saw. So before we even swept it, all right, we created a fair value gap on the 1 minute, and then we validated it. On top of that, we broke structure. So after we broke structure, that's where I entered, and my entry was at this candle right over here when it's coming down. And honestly, this trade, it wasn't the best because how I should have, or how I should usually kind of trade is that, wait, let me get rid of this, is that I should wait for us to tap into this liquidity level first, and then I can see whether how price wants to react. And you can see once it tapped into it, we just had a sell off. And that just makes sense because, this is a level of liquidity, right? So people who longed here most likely gonna, have some kind of sell off here, and then that's just what happened, and that was just the reaction of the the price movement, or yeah. So ended up getting stopped out right over here. Um, but how we could have done better is that instead of taking a trade here, we could have waited until, like I said, price tapped into liquidity, see how it wanted to react, and then what we don't really get that many. I mean, we get a bearish fair value gap here and a bearish fair value gap here, but no signs of bullishness yet. So we could have waited just a bit more, and then at this point, we created a inverse fair value gap, tapped into it. On top of that, we broke structure to the upside, and in my opinion, I think it's way better to enter off like fair value gaps instead of just like and just instead of having break of structure entries, because back then I was doing well with break of structure entries, but now it's like completely different. So like it has changed in direction as we're trading. So I kind of gotta probably enter off fair value gaps now. And if you could see, if I entered off this fair value gap, that would have been a way better risk to reward, and I could have had a 1-to-1. I think, yeah, exactly like a 1-to-1 if I entered off that fair value gap. Um, but yeah, so this could have been the trade. Ideally, our TP would be here. And the thing I don't like about this is that we end up coming up to a 1-to-1. And usually when I do end up hitting a 1-to-1, I would put my stops at break even. But, you know, at this point, you know, it would be either a break even trade or a 1-to-2 trade. But ideally, it would have probably been a break even day. So, you know, other than that, yeah, I really shouldn't have traded today. But in the end, this is what it was. Same for S&P, but I think S&P did better because I don't know what the hell was going on with S&P, but my chart was just like I don't know, like look at what was going on. What is this chart, bro? This doesn't even look like New York session opening. It just looks like pre-market or something. Like what is this? Oh my god, like this, I know this is pre-market, right? But then like all these candles, like what the hell are these, bro? So a trade I could have taken. Um, honestly, I'm not even gonna go through this because half of the chart is missing. So I rather than just not talk about it, and I'll just leave it to, I don't know, you guys if you want to look at it. But yeah, what an L today though, cause like, bruh, I won a trade and now I lost a trade, and we got Friday tomorrow, but you know, Fridays, I don't know how I feel about Fridays, honestly. But we'll see how it goes. But appreciate you all for watching it. I'll see you in the next video.